Let's talk more about 2012 and how equity markets will perform. We're going to get live to Cincinnati. Peter Sorrentino, Senior Portfolio Manager at Huntington Asset Advisors, joins us on the program this morning. Peter, good to have you with us here in the Asia Pacific. So what do you think about Alcoa's numbers? Is that a sign of, I guess, numbers to come?
Susan, I think the corporate America is going to be somewhat a victim of its own success. We've seen margins increase throughout the downturn and really peak profitability, and typically that's not a good precursor for future growth. So I think we're going to see solid results coming in, but from this point forward, and we've already had some shots across the bow. Oracle's warning that was out, the last report from retailer Costco showed that their costs were going up. So from this point out, it's going to be a real tough slog to really grow bottom line at all.
Okay, so would you say, Peter, that if a company beats, then they will reap the benefits of the markets in the sense that their stocks will go up if they come out with better than expected numbers?
Yes, anybody who can continue to post growth from this point forward, the market should begin to separate itself out. And hopefully this year what we're seeing in some of the early trading is that there's a differentiation. It's not simply a switch on and a switch off. You know, one day all banks go up, the next day all mining and mineral stocks go up. Hopefully we get that differentiation, and the solid performers with growth, we'll start to see it in their share price. And those that level off will basically stall out right where they're at.
Yeah, but what a start to the U.S. Stock markets for this year. I think the second best start since 2006. What do you make of this optimism? How are you positioning yourself going into the first quarter?
Well, our concern is that we don't want to miss the party, but by the same token is we're looking at the kind of the backdrop here. And until the situation in Europe, you know, finally gets into some resolution mode that the world can take comfort in, U.S. banks are going to be a prisoner of that just because of their cross ties and their holdings, especially in the derivative market, which was mentioned today in the Sarkozy and Merkel announcement. Until those banks are freed, the U.S. economy and the U.S. market really can't break out of this sort of range-bound action that it's had. Without the banks being able to grow and deliver, it's going to be very difficult to get the market really any further than what we did last year.
Yeah, well, you know, banks are having a tough time. As you saw with Unicredit in Italy, they have their own issues. I get it, but you know, banks are being asked to shrink their balance sheets right now. So are you saying it's going to be another tough year on the markets? Is that what you're saying?
I do. You know, we've got a lot of, especially here in the U.S., there's a lot of regulation that will begin to take effect this year. Early parts of the health care bill go in. Dodd-Frank really begins to bite into bank activities going forward. We're seeing pushback from customers in terms of rebellion over additional fees. So it's going to be, I think, a really difficult market in terms of being able to spot the long trends. I think there's going to be a lot of reaction to news headlines, kind of the same way we saw last year. But again, those companies that are able to fight their way through it and continue to deliver, hopefully this year we see their share prices begin to differentiate themselves. That was the problem, is that everything, whether it was commodities or equities in general, everything began to correlate last year. And so you're either all in cash or you're all invested, and there really wasn't any sorting out of one class or one type versus another.
Right. So, okay, so what are you saying, that there are opportunities to short, and are there also opportunities to go long? Where are they?
Well, really, we see a great deal of strength in areas within the U.S. involved in agriculture, involved in transportation equipment. I mean, if you look at some of the orders coming down from most of the major carriers, even this record order that just came in from American, that'll keep the likes of Boeing and Airbus, General Electric, those companies will be busy for quite a while filling those orders out. That's good for that segment and all the tie-ins to it. The energy build-out in North America continues to be very strong. If the pipelines don't get built, they're going to haul it by rail car. That is a huge area of expansion in terms of the center of the country. And again, there's a lot of parts of the U.S. where, you know, manufacturing has become competitive on a global scale, and we're starting to see that in the export data. 2 years ago, who would have thought the U.S. would become a net exporter of petroleum products? So there's a real growth engine going forward. The natural gas area, we're looking at possible, LNG exports to the rest of the world. So all of that bodes well for selected sectors, and that could be very profitable.
Yeah, I guess you got to pinpoint the opportunities. Peter, thank you so much for your time. Good talking to you. Peter Sorrentino joining us from Cincinnati.